Guys, so I'm here again for the US market quickie commentary. So let's start off with the S&P 500 index. So in the US market, there are two ways to check the S&P 500. You can check it via the ETF called SPY, and you can also check it via the index, which is the SPX. So let me just put on my chart template. Right, so I hope that everyone is fine. This will just be fast, so I want you to focus and be attentive with the details of what I will be saying. So I hope everyone's okay. Okay, nobody's here yet, so anyway, those who are going to watch this in a replay, hi to all of you. I hope that trading is you're doing well with your trading. So especially those Filipinos and guys who are trading the global market. So let's check the SPY. So this is the ETF of the S&P 500. And as you can see, we are now at the all-time high level. This level right now, we closed also green. Update today 0.35%, and this is that level where before the market crashed last February due to COVID-19. And as you can see, it went down to as low as 217.26, and it started to drop from all-time high to this low, and that is around 35% decline within less than a month. So within 1 month actually. After 1 month, the S&P 500 started to climb. Everybody was expecting that there is the V-shaped recovery. This V-shape is not really the expected one, but the reality, what happened is really a V-shaped recovery. So I was even also forecasting that we might do this double bottom first before uh, going up. So, but it did not happen. So what happened is really a V-shaped recovery. So drop and rally up to the EMA 200 and then break out, pull back to EMA 200 and price hold above the EMA 200, form the descending triangle and breakout, and right now we are above all-time high. So I mean we are above this all-time high 339.69. We are now at 334. I have a bullish position right now at the S&P 500. Today I have just opened the trade, so I'm using options. So I bought call option for this. The reason why I bought call option is that implied volatility of S&P 500 is relatively low, and the reason why I'm bullish is that we have here the all-time high breakout. We made a gap yesterday, and the price was really holding well over EMA 21 of the 15-minute time frame. Today, it gap up again, retraced back to the high of this previous day high, hold, and we have double bottom, pin hammers and engulfing bullish candle. We have here a double bottom. So target today is 344. Tomorrow also I am expecting that the market will still continue to climb up. You can see also here, if you will notice, that every time, a few minutes before closing, there is that huge volume which is coming in, and these are institutional buyings that are right here, 10 minutes before the market is closing. Although the daily volume is still low, relatively low compared to previous days volume. So this is still my concern that I'm not yet really 100% sure that the up move will really sustain for long until I see that the volume will really spike up more than more than its average volume. So here I cannot see the average volume in a way. So I want to see that the volume will spike previous days, or let's say previous 10 days volume. So right around this level here. So this bar should somehow climb. So that will be the case, then I am my target for S&P 500 is this one. So I will take the half of the range when market uh, crashed to this. So I take this as one box. I take the height of that box. That's 115 uh, points, and I draw 115 points up. So around 460 is my target price for S&P 500. Should we go for bullish continuation? All right, so that is S&P 500. I'm expecting that tomorrow will be an up day, and the reason for that is that the volatility is already subsiding. It is now down, falling. So, but there is a support price here, so my expectation is that volatility will. This is volatility ETF VXX. So the ETF of VIX. You can check VIX or VXX. It's the same. So as you can see, when the market was crashing last February and March, that volatility went as high as 78.7, and we are just now at 24. And as you can see, we are at a downtrend already. So tomorrow will be up day, and another proof that volatility, the US market will be up tomorrow, as I have posted in my page, is the Australian dollar or Aussie yen currency pair, which is around 670 to 80% correlated to the US 500 or to the S&P 500. So what I can see here is really a very tight consolidation. It's an ascending triangle, and as you can see, this is the high, the yearly, the annual, or the 52-week high, and then we are making higher lows, higher lows, higher lows, higher lows, until we have this neutral candle plus an engulfing candle, and we are also in a squeeze pattern. And then we are in a very tight consolidation. This is the key resistance level to break. We are now creating this higher low, higher low, higher low until that range is so tight. Then I'm expecting a breakout, pullback, and trend. So again, Australian dollar and Japanese yen pair is around 70 to 80% correlated with the S&P 500. So sometimes most of the time I'm using this for gauging the market. So the opening or the sentiment of the market for the next day. I also sometimes gauge the market using the crude oil. So as you can see, the crude oil is right now bullish. So let's go to the 4 hours. You see also that it's making higher high, higher lows. And now we are also in a very tight consolidation. We are about to break the 43.5. Today we have this uh, bullish candles. A break of 43.6 will be a buy signal for the oil. So stop loss for oil will be right around here, 42.2. If you want to be a little bit, want to give more room for this, then your stop loss should be at 41.3. All right, so the tight stop that I can apply here is around here, right around here at 42.1. The target for crude oil will be, so distance from here to here, that's 2.48, 2.48 up move from here to here. So around 46 is my target for crude oil. All right, so crude oil is also somehow correlated to the S&P 500. Whenever crude oil crashes, the market, U.S. market also crash. So if we go back to the February and March, when crude oil also crashed, it happened at the same time when the U.S. market crashed. So look at that. That's a very very significant move downward from around 60. It went down to as low as, actually it even went down to minus 40 last April. Right, so I hope that you got that one. And what are the stocks that I'm watching right now? So I have here filtered. So I'm right now hunting for opportunities where I can use option trades. So I will show you. So option trades, if the implied volatility is low, I am debit. I'm going for debit type of strategies. But if the implied volatility is very high, I am going for option selling. So if you want to learn more about options, you can uh, tell me, and I am actually teaching my students to trade options in the US market. All right, so for example, what I have just filtered out very high volatility but liquid stocks and ETF. So by the way, there is that really nice opportunity here and that I saw. It's one of the stocks that went IPO, so it's really the one that I was expecting broke out from the resistance. So nag-IPO ito, went IPO last August 6th, so this month, beginning of this month. So what can I see in this chart? So here is the high, and after the post market just broke out. The price broke out of the post market 106.99 already, while it closed today at 104.09. Post market it went up 2.79. So this can be a very nice opportunity for the next day. I might do a day trade with this. So my stop will be, so 89.35. My target is the height of this, the range of this, 37.85, 37.85. So it's around 140 target. Okay, so as you can see, price is just sitting above the VWAP. 5 minutes before the closing, there is a very huge volume spike which means that there is a big possibility tomorrow that this will rally. So watch out for that, guys, tomorrow. All right, so yun. So the next one that I have here is GPS. So I have opened the trade earlier. I also call. I bought calls for this. Broke out from this resistance with a gap today, and consolidating earlier. I saw that it's in a very tight consolidation. I bought calls. Calls because I found that the implied volatility GPS is quite low, so this is good for buying call option, and the prices of the option is not so expensive. So yeah, that is GPS. Li can be it's also a nice one. It's related to the lithium ion, which is manufacturing parts of the battery. I mean that main component of a battery for electrical vehicles. PDD, I placed no, this was not filled, but was hesitating earlier because I saw that there is the double tops here, and the break of this will be a sell signal, but there is a bullish engulfing candle. So what I'm expecting is a sideways market. So I made an order right around 80 to sell a put spread. Put spread means I sell a put option at 80, buy a lower strike option like 75, and I will get a credit for, and my trade will expire this coming Friday. So what the put credit spread will do is that you will get those 100% credit. Let's say the credit is $120. As long as what you need to what is your goal here is that as long as the price is just sitting here, even if it won't move until Friday, if it moves up, that's good. If it doesn't move, it's good. Or if it moves a little, as long as it's above 80, you will still be profitable. But the only time that you will be losing the trade is that when the price breach below 80 and the option will expire in the money. In that case, my stop loss will be triggered, which will be equal to the credit that I receive. So if I receive a credit of $130, then I will lose $130. But the point here is that there is a small possibility that it will drop. Why? Because there is a bullish engulfing candle here, and my expectation is that it will make a sideways move. So that's why I sold the put spread. So if it will stay above 80, $130 will be mine until Friday. All right, so that was the background about put credit spread. That's all, guys. So next time ulit, uh, and I might be tackling all about PH market. God bless to all.